you're curious why AI stocks like ARM are down 16%, Nvidia down over 9%, SMCI down 22%, and AMD down 6%, well, you came to the right video. In fact, the reason for this is SMCI. Now, I'm going to read you guys this paragraph and explain why this is important if you don't catch it in the paragraph. Earnings concerns is the headliner for this paragraph. It says, another key point to consider for Supermicro stock is that it will report earnings in about a week and a half, more specifically on Tuesday, April 30th. This announcement usually comes with a pre-announcement that earnings would come out better than expected. That's what has happened over the last 7 out of 8 times. This would be the 8th time, and there was no pre-announcement of an earnings beat. That's wildly out of form and is the first time in roughly 2 years this has happened. That's likely got investors skittish, wondering if the end of the salad days has finally hit. So basically, before SMCI reports better than expected earnings, they come out with this report and they pretty much give guidance and confirm that. They have done that for 2 years now. There has not always been AI hype for 2 years in our markets. That goes back to the days of 2022. Well, this is the first time since 2022 SMCI has not came out and said, yeah, we're going to smash earnings. That's problematic. That comes after ASML this week reported way worse guidance than expected. Their UV products for their highest end chip manufacturing customers like TSM and Intel and Samsung, their guidance was 90% lower than last quarter for these products. That was not good either. You also had TSMC that came out that reported actually pretty decent numbers, but they said there is some real weakness still in handheld devices like phones and those chips, of course, and then a lot of weakness in personal computers. But SMCI seems to be the dagger in the coffin for this AI trade. Dennis Dick, a proprietary trader at Triple D Trading, don't say that to anyone else outside of this video. You're only going to hear me say that once. He says, quote, people seem to think the AI trade would go up forever. It got crowded and now it is unwinding something fierce. He said, quote, this is just a tech wreck. I thought train wreck, tech wreck. A rotation out of tech, and the idea of tech as a safety trade. The AI trade in particular is unwinding. Goes on to say the drop started on Friday after Supermicro announced its third quarter results would be released on April 30th. However, it did not pre-announce as it had in January when strong preliminary results sparked the stock's 2024 rally. Supermicro did not give a quote positive pre-announcement, which is being considered a negative, along with an important AI data point, wrote Wells Fargo Securities. The firm has an equal weight rating on the stock. Dick suggests that this could be adding to the day's concerns. I think if they were going to blow it away again, they probably would have said something. So maybe that is concerning a bit. So that is by far the biggest thing that is contributing to this decline. Now, SMCI, they don't make actual semiconductors. They make the racks that semiconductors go on. So basically it affects everyone else. If SMCI had bad numbers, that likely mean everyone else did also. Now, yes, this is assuming SMCI had bad numbers or maybe missed estimates. It doesn't guarantee that just because they did not pre-announce. But here on the day today, markets are taking it as if SMCI, the whole AI sector, is going to report bad numbers. And that's probably true. It seems like there is some inventory starting to build out there, especially for NVIDIA products. And you can only manufacture tens of billions of dollars of semiconductor chips for so long. It's not a commodity. It's not a product that normal average people are going to buy every single day. This was going to happen at some point, but Wall Street expected this inventory, they call them a glut, to happen in 2025 towards the second half of the year, or 2026 seemed like the most likely scenario. That's a problem. And it's a problem for the broad markets when AI is such a strong factor that has been really influencing everything. I mean, without AI, stocks would not be where they are today. And then you have to sit here and wonder, if the AI trade is over with, should stocks be where they are? Probably not. And if AI is no longer a prevailing force in our markets, then what is EPS going to look like? Maybe stocks are severely overvalued if technology comes in with not so great numbers. We also had ARM that received a downgrade today, and this is also not helping things. It says, adding fuel to the fire, PNB Paribas analyst David O'Connor on Friday reduced his rating on ARM stock to neutral from outperform while keeping his target price at $100. And you'll see Wall Street analysts, they love to chase when stocks are going up, and they love to beat stocks down when they're going down. That's likely going to happen again. You're probably going to get some downgrades coming out over this weekend, coming on Monday, maybe throughout the rest of the day today, just to kind of beat down the chip and AI sector even more. Now, I've been bearish on our markets for a while now. I just think earnings expectations are up here, and the reality of earnings are going to be down here. I think that meant we were going to fall a bit, and that is exactly what has happened. And if you guys are a viewer of this channel, you had a heads up a long time ago. In fact, I've been talking about this for a while. Here's some videos that were posted on the channel. Warning, stock market crash is coming. Watch ASAP. Fear is building, or fear is coming into the stock market. Get ready. This week is going to be crazy. I mean, this was back at the end of March. And where were markets at the end of March? They were at pretty much all-time highs. Even into the first 2 weeks of April, stocks were doing well. It's just really the past week or so the stocks have taken this dive off of a cliff. Now, the question is, where are markets going next? And I'll tell you right now, if earnings come in bad with AI, with big tech, and maybe let's say big tech comes in okay, but AI earnings come in bad, you're probably going to fall down to about 380 on the NASDAQ. I don't know if the 200-day moving average is going to hold support at 394 or so. I think you could fall under that, probably down to about 380. Now, if earnings just come in worse across the board than expected, yeah, you're in for a problem. You could probably fall down to about 340 on the NASDAQ. And if, let's say, the economy takes a turn for the worse, let's say geopolitical tensions ratchet up, let's say the Fed starts to get more hawkish again on inflation, in which you did have Fed Goolsbee that came out and spoke today and said there's a chance they might need to raise rates again. He kind of beat around the bush there. He said it really quick, so algorithms really didn't pick up on it too much, but he did say there is a chance that they would need to raise rates again. If any one of those scenarios, quote, added fuel to the fire further, I mean, what's to say you couldn't fall back to your 2022 levels? 300 on the NASDAQ, 315, maybe in the twos. That's always a possibility. It depends on the forward-looking estimates on earnings. If AI is not going to be a driving factor, like a lot of analysts and hedge funds and institutions have said, people have said, oh, earnings are going to come in great because of AI this, because of AI that, productivity is going to increase so much and blah, 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 blah. Yeah, of course, that's going to happen some point down the line, but not now. That's not going to happen now. If anything, AI is going to be a drag on earnings because look at Google, Microsoft, Meta, that's introducing these AI tools that are not bringing in pretty much any money, and they're spending billions of dollars on these AI chips. AI could be a drag on earnings for a period of time. Eventually, it will be a net positive, most likely, but for now, it's probably a drag. And you have a company like Nvidia that has soared to over a $2 trillion market cap based on this presumption that demand was going to last in this current form for years. And that's just not where we are. That's not what's happening. And really, the way you just had no respect around this 100-day moving average doesn't look good if you are a bull. And again, the AI case for our markets eroding also does not look good if you are a bull. But I will tell you, in the near term, you probably get a bounce coming early next week. Why I think that is because the RSI is sitting under 30. You're at 29.82. This is one of the more aggressive drops that you have seen in years. The volatility is the selling is definitely quite incredible with this one. But anytime you get down to about 30 here on the RSI, you tend to bounce. Like, you don't tend to go under 30 on the RSI. For brief periods, you can. Back here in January of 2022, you did. And this is when you basically just fell vertical here. But you do tend to get a bounce to kind of reset the RSI, to kind of screw people that are buying puts. That's really the market makers, what they try to do. So odds are you do get a bounce coming next week, and then probably further selling from that point. I can go ahead and pull up the earnings calendar for next week, and there's not much for the beginning of the week. Monday, there's really nothing that's going to move the markets in any kind of big way. Tuesday, you do have Tesla, Visa, Enphase, UPS, GM, Pepsi, Mattel, Texas Instruments, but none of these stocks are really going to have a broad market impact, right? Wednesday, you are going to have, let's see. Wednesday, you are going to have Boeing, AT&T in pre-market. I was looking for Lam Research. That's actually Monday and after hours as well. You have Meta, IBM, Lam Research, ServiceNow, Chipotle, Ford, and Align. Now, Lam Research is another high-flying AI stock, as in 2024 and the second half of 2023. That could be one that will be important for that overall sector. And then Meta will affect your big tech names. And then on Thursday, you will have Microsoft, Alphabet, Intel, Snapchat, Roku, Altria, Caterpillar, Southwest, Bristol Myers, American Airlines, a couple other names that are not on here, but Microsoft, Alphabet, come on, that's your Mag 6, Mag 7, whatever we're calling it these days. And I mean, if any of these big tech names reports bad earnings, let alone a Lam Research, something that is more directly related to AI, you're going to have an even bigger problem on our hands quickly. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.